Hello, guys. Um, it's Wednesday and some few minutes after CPI release, and I posted in a group that I'm expecting higher prices. So I took a trade earlier after the release, expecting this buy side to be hit, but no, it wasn't hit. So it had to drop down again, give me a market maker model. So I had to buy here. And can you just imagine how sure I was that price would not take that swing low there? I entered right in there. ICT thought, and then FM Trade FX lent. Then he has applied it. Stated I didn't want to see. I had wanted to see a part of the fair value gap left open, and then the wicks did do the damage, but price continued higher. So I made some funny comments like the buyers have agreed to send price higher and a whole lot. No, market is not moved by buying and selling pressure. All right. And in this video, you are going to see how precise and how these markets are arranged. You may think that it is random, but no, it is not. Just look at how price is resting upon down close candles. That is the other block. Rest upon them. This is what gives you the sniper entries. This is what they call the sniper entry. It is not what you enter into a trade by luck and then it just reverses from there. Then you hope. The keyword is hope that price moves in your direction to that support or resistance zone. No, market only moves to hurt people, to create confusion. So you see the release of the CPI news. This is how it dropped on JPP USD. It placed many traders, in confusion. They were like, I, I was sure this market was going to buy, and even I was also sure that CPI was going to buy it and take out, you know, a couple of relative equal highs on the 15 minutes time frame. But then I knew that I'm not supposed to be in a position before the release of CPI. So I had to wait. After the release of CPI, then I start my hunting. Because yes, indeed, the retail traders, yes, they have in place, they're in confusion and they're like, what is happening? What is happening? See how the price dropped, so I'm definitely sure price is going to drop. It's going to keep dropping. No, no. All the damage has been done. You realize yesterday price kept printing higher. It kept printing higher, kept printing higher, kept printing higher. So there are people holding trades down there, placing stops down there. They need to take all of those. They did that beautifully. Then I said in that group, okay, so now I'm still expecting higher prices. Even though CPI did not go bullish, I'm still expecting higher prices. But then time is a key factor here. Time is a key factor. So what time am I expecting this move to take place? So here you can see as price keeps on printing higher. So it looks like the buying pressure is very strong. Oh boy, buying pressure. I started as a newbie. I didn't know what was going on. It was like, hey, it was very confusing. Yeah, trading. It was very, very confusing. Learning the ICT uh, concept. It was very, very. You would note I'm only using the first presented fair value gap here. You don't see any new week opening gap. You don't see any new day opening gap. I'm only using the first presented fair value gap. Only that. I'm not even looking at the opening range gap. No. That is why he said you don't need everything. You don't need all of those tools. See those candles printing? That is all you need. The sweep by side, the sweeps outside. You're in a dealing range. Premium discount. It's quite simple. It's quite simple, but yet it's very difficult. Very, very difficult to learn. So here you can see price is almost at equilibrium. And what happens at equilibrium? There is either consolidation or price begins to print big green candles. Big green candles. Leaving gaps. Not making any way for entry. So there were a plethora of entries. Counting from those two first order blocks, and then this first two fair value gaps, and then the fair value gap creating as I'm speaking now, because it is at the equilibrium, it is still seen as a discount fair value gap. Right there. Right there. Price entered in there. You see how it's rejecting real quick. It's like, oh, so I was I was using my phone there, so obviously there were a couple of calls I had to make, and oh boy. So how many pips? I was about 56 pips or thereabouts, because that's a literal move to stop there. Just look at that. So when we tell you market is predictable, we say with a joke, we joked in. No, it is not a joke. Market is very, very much more predictable. You can time it when it's going to move. When will market move? After hurting and putting traders, retail traders, into confusion. So how many pips was that? Is it 51.8 pips? Yeah, thereabout. So price got very, very close to my take profit, and it began to flirt with me. It began to flirt with my TP there. So I had to take some contract off, and then just let the rest of it see if it would get there. And that, because that place was those relative equal highs were very juicy. They were juicy. There was a lot of stops there. You can see that. You can see those relative equal highs, and then it works on forex, guys. The ICT strategy works on forex. So if you're finding difficulty in learning it, all I have to tell is that don't try to bring every tool on the table. No, don't try to bring every tool on the table. What you need to know is how to spot a daily range, how to spot relative equal highs and lows, and the time. The time is the first thing first. The time. What time are they going to make a move? What time? You focus on the macros as well. The macros. 8:30 macro. The last 10 minutes and the first 10 minutes at the end of an hour and in the beginning of the hour. You need to get to know that also. And yeah, you're good to go. You're good to go. It is not something complicated. No. It is not complicated. It's quite simple. It's quite simple. So there, I took some contract off, and then price was like, hey, daddy, I'm not coming in yet. I'm just taking my time. And right there, just gave me what I needed. Boom. Come to daddy. Yep. A few seconds. So this is a sped up video, and the actual move was, I think, right there. Take profit